Jim, are pipes dead or they're just different now?
It used to take a long time to do a pipe. We worked on one deal that was quite successful years ago. It took us 6 months to raise the pipe. Everybody ever made money, but it was hard work getting a pipe done. During 2020, I think it appeared as if pipes were easy because you'd be out marketing a pipe, the deal would leak, the shares would trade at $20. And why wouldn't everybody want to commit to a pipe at $10 when the shares were trading at 20? It was very easy. So I think we're sort of back to a market where, marketing a pipe, takes time, and it really comes down to, can you convince an investor to commit to common equity at $10 and give them confidence that the deal's, not going to trade down to $2 after closing. And, a big part of that, I think my view is there's kind of two components of that. One is, we really need to avoid structure. These deals were getting done over the past couple of years because you had downward ratchets and things like that. So even if the share price went to 30 cents, your investors still made money. Made it much more difficult for anybody to want to own the common equity if you had a lot of structure. Second big issue over the past several years is these deals were closing without enough cash to get to cash flow positive. And so, even if some fundamental investor wanted to buy the stock, if they knew you were going to be desperate to raise money in 6 months to a year, they were just going to wait until then. So I think the key to getting to getting a SPAC deal, a pipe done these days is, one, the deal's got to be priced right. They have to be convinced that the stock is going to trade at $10 or above, and that, the company is going to have enough cash to get from here to there and not be desperate to raise money in the near future.